Let's start recording now.
All right, great. All right, so ADX and DI, if you guys
Hmm.
happen to have your trading view open, you can add it now if you want to follow along, or you can take notes. So once you add
Yes.
that you know,
Hmm.
once you add that indicator, it kind of lets you know where we're at. So in April, we had that negative trend going, and this is the confirmation. The middle line is your trend speed. So when it's below 20, it's kind of a mid kind of chopping point. And then so green and with the 20 with the ADX indicator above 20 and raising up, it lets you know how strong that trend is, as you can see here. And then you also get the nice green arrows, red arrows, and then the orange ones letting you know that we're in a neutral. So I'm gonna mark these. And so I'll do this, say, on a Sunday night or Monday, like tomorrow, where markets are closed. I can kind of take my time, kind of drawing my supports and resistance and my kind of like market conditions. So I'm gonna use orange for chop, and I'm gonna use green for uptrend. Let's see, that gets right around there. And I'll change the colors to green. Green here, and then I'll mark my downtrend just to remind me, you know, where we're at.
Yeah,
So
and try to capture as much of the zone as possible. There you go.
okay. So a lot of people at this time in July through October, they triple their accounts, double their accounts, quadruple, and they don't know why. Everyone was winning, including me too. So doubled a couple accounts, and so now this time, a lot of traders are asking me and on. They're like, "Hey, Henry, and my trades aren't working anymore." And so this is why. So here you can see a clear uptrend with the SPY. So SPY
Mhm.
containing the 500 of the best companies in the US, and they also rotate them. So they take the bad ones out and they only keep the good ones in.
And you
This
can
one,
see, right, that whenever it pulls back in those situations, you can trade those anytime.
yeah, that's pretty
You
much
know.
kind of like a when they mention buy the dip, this is
Hmm.
exactly what they mean. Buy the dip only works in this environment here. And so
Yes.
if I use which most commonly people use the 21,
Hmm.
21 average, the dips. So dip,
Yes.
dip, dip. Those times
And sometimes it will go to the bottom Bollinger. Sometimes, right? If it's strong enough, it'll go to the bottom Bollinger. But a lot of the times, it'll just dip down to the 21 and just bounce right off.
so if you just had one basic strategy and you said, "Hey, I only want to take dips to the 21 and I only want to do it in a positive environment," that's
Yes,
fine.
that's
There,
also
there,
good.
there's some traders where they say, "Hey, I'm really conservative. I don't want to lose any money. I don't want to risk blowing up any of accounts." They might stay away from this environment
Yes,
and they might stay away from this. It's like, why? This is choppy. It's
yes.
really hard to win here, or you have to pay attention to it. And then so if you're swing trading, maybe you can't, get to the trade in time. Maybe your alerts are slow, or you can't trade in the middle of your workday. So that could be happening too. But here, this is kind of like that easy time to make money. So that's how you use ADX. So I like to look at
Mhm.
this. This reminds me where we're at. So if I'm for me personally, if I'm in this, I don't want to be holding 10 positions at once. I don't want 10 contracts open.
Now, keep in mind, guys, that we are looking at the daily chart, right? Most of our focus is going to be daily charts and weekly charts, right? With some monthly charts, because sometimes if things go down far enough, right, the monthly chart will throw up a signal, right? But like short-term trades between 2 weeks to 2 months, right? I would say, focus more on the daily chart. And now, by the way, this is not like a hard and fast rule, but for as much as possible, you focus on the daily chart when you're doing short-term trades, and when you're doing deeps, long-term deeps, and things like that. The weekly chart is the uh, better one, because see, another thing to remember is what looks like a really big fall on the daily chart can be kind of a blip on the weekly chart. right? So actually, the funny thing here, right, is that now the weekly chart is also choppy.
Yeah. In
So,
general, the weekly is a
right.
lot more picky about what it calls an uptrend, a
Now, if you
downtrend,
think
or a
about this,
sideways trend.
though, we are back at the 21 here again, right? So there is
Yeah.
some possibility, of an uptrend, right? However, don't quote me on that, right? I'm not trying to predict anything, right? It just looks like okay, it's coming back. It's the averages have kind of caught up, right? So there is some, you know,
Yeah, no one knows what is
right?
coming next. It could be this.
Yes,
You kind of have this uptrend dip, and then we could cool off before
yes,
say Santa Claus rally. This could be 3 months of nothing, or it could be another, 5 months of this. It,
yes,
that's
yes,
that's
yes,
a that's a possibility. So it doesn't mean that you can't find gems because gems they exist out there, but
yes.
you're gonna have
There
to
are
look
some
for.
sectors that are really shooting up, right? Like the mining sector and things like that, right? You could find companies there and do some trades there, right? Um, yeah, like WDC is a good semiconductor play here, right? Western Digital,
So
um,
if you cut this,
right?
you'd be
And
okay.
and here's the thing, right?
ADX is green all the way through.
Yes.
So this is
Now,
this is
here's
very
another
good.
interesting thing. Companies like this, they're usually not paid attention to for a long time. Then suddenly they break out, right?
Here, this is
So
normally this is what
yeah,
Western
this is
Digital trades at.
right. So it's like, hey, do you want to tie your money up here, or do you want to wait for it to break out? Now, this is where you would say, okay, you know what? I'm going to draw the supports and resistances, right? And you can find a lot of these companies in like the Investors Business Daily and other news publications, right? When you draw supports and resistances and they break out significantly over a resistance, you can use that to either buy it right there or wait for it to pull back it, and maybe go sideways for a while, pull back a little bit, and then buy it like over there, right? Yeah, you could use these kind of flag areas too,
Yeah.
right? That's another way to do it as well.
Yeah, yeah, so going back to like the beginning of the stock market,
Hmm.
like stocks, bullish stocks, they all move in the same kind of pattern. You kind of have that bullish pulling up, and then
Right.
you
Then you
have
have a
this
flag, like
coiling
a
consolidation.
base consolidation. Yep, that's
Yeah.
the way to put it.
So it tightens up, coils up, makes another leg up, and does this consolidation,
Yes.
coils up, same thing, consolidation.
What?
Now you have
Okay.
to run up.
This is
And
the daily chart, right?
this is a daily chart.
Yeah.
And so if you look at just the core of this symbol here, so this is symmetrical triangle. So this here, this would be your buy zone in green.
Yes.
You can take a trade here. This can be a signal, but it doesn't mean that you
If you're feeling
buy
brave, you
it.
can take it
You,
inside the flag itself, right?
yeah.
But if you're like, you know what, I'm more conservative. I don't want to lose the money, right? In case, so then you can take it. And if you're going to do this long term, again, look at the weekly chart first, right?
And then so this would be considered a buy zone. If you can coil here, trade here, if your candle hits here, that would be a buy signal. But you'd have to watch
Hmm.
it. If the stock goes, you buy it here, and then the next day you end up here, that would trigger up
Stop
your
out,
stop loss.
stop out.
You shouldn't hold it. You shouldn't let
Yes,
it go, all the way here to know, hey, it's not going back up anymore. You can
exactly,
only let it go down maybe about this much to know.
right.
Actually, this
But
support here.
but show the weekly chart, right,
So
as well, because if we're going to do long term trades on companies like this, right, you generally want the weekly chart when you're looking at it, right?
let's see, weekly.
Um,
So you want to see
and
a squeeze or
yeah, yeah, we want to see the squeeze too, right? So if it breaks out, right, and then it stops, right? Then now you're not going to get this everywhere, right? Like in here, it just blasted off, right?
yeah,
So you just want to say, okay, you know what? Whenever it pauses and maybe comes back, because see, some of these flags are like 4 weeks, right? Which gives you quite a bit of time to observe it, right? And if you put the moving averages, and hey, you may know maybe you missed the bottom squeeze, that's fine because how does anyone know when it's going to break out, right? Like if you go back, right, you can see that there was a base formation for quite a long time, right? And that's the problem with a lot of these companies, right? And the thing is, right, if you have money stuck in an account, right, you're like, hey, where do I want to put my money, right? Do you want to put it in something that's sideways for a long time, even if it does go up? Like if you see it's gone up like almost 5x there or more, right? But it only happened after like going back, right? Remember now, each
Yeah,
of these
that's
candles is
probably
a week, right? So we are looking a couple
that's
of
like
years
20,
before.
20 years, 20 years of like the same kind of behavior.
Yeah, yeah. I mean, well, in this case, 2 years, well, but maybe if you go back, yes, right? This is a very long, you know, um, kind of situation, right? So in this situation, what you would do is wait for the breakout first, right? So that is one of the limitations of the squeeze, right? When the company is outside the normal public popular company list, so to speak, right? Um, what happens is that even if it's a good company, right, it could be the most fundamentally sound and great company, right? And there is no doubt that a lot of the IBD companies are like that. But unfortunately, because nobody sees them, right, including the institutions, at least not at that point in time, right, you're going to see the sideways movement going for a long time, which is why you need to draw the supports and resistances and then wait for the breakout as proof that people have started actually seeing it, right? Unfortunately, the stock market is a popularity contest, right? Whether, it's not based on actual, many of the stock prices are not actually based on the real performance, right? Like many of these companies, I would love to own as a business, right? Like if I were running it as a business, right, or having somebody run it as a business, hey, that's great, right? You get a lot of revenue, right? But the stock price itself is like, eh, you know. So, that's why in this situation, right, it is if you cannot own the company, well, wait for it to break out. So uh, and then look at the various situations where it comes back and kind of hits the either the daily average or the weekly average, and then buy it over that, right? So yeah, oh, go ahead, Henry. Yeah.
Yeah, sure. Hang on, let me go
Mhm.
on my list. Another one that kind of behaved the same way, another hard drive or memory chip company. So Seagate, I guess AI companies are buying up digital memory because they're running AI in
Mhm.
every device. It could be drones, it could be digital cameras, it could be rockets. They're putting AI in everything, and so it needs memory cards to store those large language models.
Exactly.
So so yeah, so these they still exist. It's just it's harder to find, in the choppy market. Um
Yes.
before even adding like a ton of indicators to get um kind of super confused, let me just clear my chart out. Um I
Yeah,
like to
yeah, yeah,
keep
go
it
ahead. Yeah, good idea.
um I like to keep it simple. So I use that just to kind of see like get a feel of where we're going. But if I'm looking at individual stocks, then I'll look at simple moving averages, such
Mhm.
as the 50 and the 200. And so I'm looking for golden crosses. Let's see. This
Yep.
one. I'm gonna do,
Yep.
let's see, second. It's these ones here. Inputs will be 50. And then we're gonna do red. And then we're gonna do 200 in gray. It's an old moving average. I'll make the 50 a little bit more bold in thickness. So when I'm shopping, I'm looking for opportunities. And so in that choppy market, I only like to hold like maybe one or two entries at once. And so here, this is Golden Cross,
Mhm.
as you guys, it's very popular, very famous. And then when 50 is crossing on the downside, that's death cross. And so if you catch this, you can catch this kind of move, which is
especially
one,
especially if it breaks out of a resistance, right? Because if
yeah,
you,
for
you can see, right, if you go back, right, the 50 is over the 200 in a lot of those situations, right? um so what you want to do is you want to see a couple of things, right? You want to see that ADX go up, you want to see the crossover, and you want to see the separation of the smaller moving average, in this case the 50, right? Separating further and further away from the 200, right? And if you start seeing that, you're like, okay, this is a serious move. Okay, so let's see, let me look for one of those bases or flags and then try to buy it there, right?
yeah. So I'll look around. I'll look for this. Yeah, you have to kind of catch it though too.
Yes.
Another way to do it is, let's see, let me go here. One second. Finviz. Can you guys see my screen? Can you see Finviz?
Hmm.
Okay, so this one you can use as a screening tool. So I'll go to screener, and then for market cap, I'll go to large, and then I'll go to fundamental, and then I'll look for, let's see, I'm looking for, or sorry, technical. Well, 50 simple day moving average crossing the. So this will do a quick scan of everything that's happening in the market, and I'll look through here. I'll look for big names. So here I'm not seeing anything. Let me see. I chose the wrong one. It is crossing the 200 above 50, crossing the 200 above. So this should shorten my list. Okay, so I got 2 pages. All right, let's see. Any of these look familiar? Uh, and
Oh
so
yeah.
I look for big company names. If I recognize a name, it's probably a company that's worth going for. Like this is Honeywell, so they're probably going to be making a lot of robotic parts. And then so this gives me a quick breakdown. So I'll run it on my own chart. And let's see. Let's try Honeywell. Okay, so Honeywell is it's right now we have a 50 crossing the 200. This has some potential. Let's see. In the past, let's see. It has done pretty decent. Let's see. 11.
Mhm.
Looks like the death cross also works too. This is a 20% down move. Let's see. This one is a 45%. So this one looks like it has potential. And then so I can see what's going on with the squeeze. And let's see, I'll just
Yeah,
add this.
Honeywell is also a conglomerate, right? It has a lot of fingers and a lot of different fields, pies, so to speak,
Yeah, yeah, this company's huge.
right?
And so
So
we came from a yellow squeeze, weekly squeeze, which is my favorite setup. I didn't know this was happening. I didn't catch it. But if you can catch it, then it'll pay you immensely. Now, so
even the ones that don't look at that, right? That
this
the
is
previous one, it still went
yep,
up pretty far,
that's it's
right? So
super
the
powerful.
key here is to set a target at which you get out,
Yeah. If you see,
right?
if you have one option and you're in this, choppy market,
Right.
if you have 30%, just cut it off. You
Yeah,
see it,
generally, yeah, 30%, or if you're feeling brave, the previous high. Go if you kind of zoom out on the previous one you were showing, right? You can see there were, say,
right
like the
here, this
previous high
is a
would have
take
been a good place to cut it off, even if it went further up.
yeah, right here. This is
Yep.
safe. And then if say you bought 2 contracts, you sold one here and you had one left and you let this one run,
Yes, that's
that's a
also.
good way to play it. But if I see this, I'm gonna take my 30% and go. I'm gonna take my 50% and go.
Hmm.
If we're in one of these,
Yep, where the
maybe I can
ADX is clearly showing a rise.
go. How do you know when to let it go? So this is one of the things that I do is simple moving average at the 10 interval. So if say if I happen to just get lucky and I caught it right at the green ADX, I could ride whatever position it was until I got a close below. Like this one didn't close. This one closed. So I would have rode something, say I saw the green ADX on SPY, and one of the companies I traded was inside the SPY, I could potentially let it
Mhm.
run for a good 5%, which is 33 points. 33
Now,
points.
this also depends on whether you have options or whether you're buying shares, right? If you're buying shares, it's fine, right? But if you have options and you make, it's been going up for some time, you don't need to wait for it to, to pull back. Just sell it if you have a good profit.
Yeah, so the you can use that as your exit. Let's
Hmm.
see if I'm in Honeywell. Okay, so Honeywell, say you got this one as a 10 crossing the 200, you have 50 crossing the 200. Say you use this as a entry point. You could ride it until boom, this is
Hmm.
your selling point here. And then let's see if there's another signal that you can go off of. But this here, this is a signal, the yellow squeeze.
Yes.
Well, it's not, it didn't do much on there. This is a signal here where it's a fast moving average crossing a slow. This is a signal,
Yes.
the golden cross. So these are
So
all
you
signals.
kind of you kind of combine it, right? You're like, okay, squeeze plus moving average crossover plus ADX going up, right? And that way, here's the thing, right? Maybe you didn't catch it right at the crossover. You're like, hey, you know what? I missed that. But then it pops up and then it comes back to the average, right? Then you catch it there, set a stop below somewhere, right? Give it some give it some room to work, and then let it do its thing.
And then so I think this one we can go over RTM. So Anand's really good at this RTM kind of environment. And so I'll let you kind of explain
Oh
if
yeah,
you
yeah, sure,
if
sure,
you
sure. But let
identify
me.
the
I think Roth has asked a question. Let me just answer it, right?
yeah.
So Roth, this question is a good one, where regarding the yellow histogram, right? So it depends on the company and on the index, right? So on SPX and really high level companies, like the ones that are really paid attention to, such as the Meta, Netflix, Microsoft, things like that, right? The yellow histogram is sufficient, right? But for a lot of the unknown companies, right, it might be better to wait for the gold cross to actually happen, right? Because the squeeze can fool you in those situations, right? Especially if the companies are like not in demand at the time that you're looking at it. So, okay, so coming back to this, right? Well, whenever we see this choppy kind of market, right? This where the ADX is less than 20, right? You can actually play the extremes, right? Now, again, if you don't have time, you have full-time job or whatever, and you don't want to monitor it, this is the time to probably either get into cash, or if you have companies that you trust and you want to just hold those, that's also fine, right? But another thing you could do is whenever it drops down and hits the bottom Bollinger, right? And maybe at the same time it hits one of these Dorvis box supports, right? You can buy calls here on the SPY, right? And set a target at the moving averages, right? Like at the 21 moving average or whatever, right? And then and then get out there, right? And of course, the converse is true when you are hitting resistance and you're at or above the top Bollinger and so forth, right? You can buy some puts there as as protection, and then get it out either if you hit the moving average or even the bottom Bollinger. So that is something you can do as well, right? And yeah, Henry, you can actually kind of draw two Dorvis boxes here, right? One in the more recent times and one in the right, yeah,
Yeah, this
right, and so
When did this meeting start?
huh,
so for this one, you want to identify your
yes.
resistance
Oh, this was
support. So
so
one way to do it is set your alert.
yep,
That's your resistance. Bottom is support. And
yes,
I know Anon's really good about this one where he's looking for this candle trading at resistance. He's also looking if the candle is popping outside of the Bollinger Band.
yes.
If
if
you
you
see,
if you have both of those, right, and of course you can also look at the RSI as well, and if that is also showing like overbought on at the resistance during a the RTM, right, during the time when ADX is lower than 20, right, and it will usually at least pop down to the averages, right. Of course, eventually the market is going to make a decision either to the upside or the downside, but while it's kind of wiggling around like this, right, you can actually do some buying and selling at the extremes, so to speak. Right. Oh yeah.
and
Oh.
also we forgot to mention what RTM means is when we're in this 80 ADX below 20, what that means is that the market naturally reverts to the mean, meaning that it naturally
Mhm.
finds itself going back into the middle of the channel. And so the middle of the channel is usually 21-day moving average. The market works as like a rubber band. The price has memory. So it kind of like reverts to, it doesn't really have a decision on where to go because I mean, we're not in an extreme bullish trend. We're not in an extreme bearish trend. We're kind of in this floating around in the middle. So as you can see, the price kind of it has a magnet. It kind of finds itself either hitting the top Bollinger, going back to the mid, top, back to the bottom or mid. And so yeah, when the market goes up, it's like taking the stairs. So it
Mhm.
kind of tugs up. And so I think this is why Anon likes puts, protective puts, is because you get your money so fast and that rewards you a lot with options because you get that fast move in a short amount of time. So in this, let's see, 1, 2, 3, 4, 5, 4 days, you're getting almost your uh, full move. 1, 2, 3, 4, 5, 6, 7. That's 1 week with your full move. But so if you want to be safe, you'll take the top Bollinger and you'll end here in the middle. You'll cut your
Unless
put
it
at this.
gaps down, in which case you could just you just get more than you thought you would.
This then you'll yeah this it
Mm.
you get a lot back on those protective puts. And so
Right.
the reason why they're called protective puts is it's assuming that you have maybe one or two longs. So it could be two longs that go out like 6 months. It could be a
Mhm.
long that goes out 1 month. But if the market's going down, it's likely that your option probably lost about 20-30%. So this gives you that money back on that
Yes.
long call.
Now,
But
there is another thing you can also do again for the probably the braver amongst you guys. If it's like, oh, you know what, there's nothing I can do in a choppy market, right? You can also do what is called credit spread trading, right? I personally like to do it on the SPX, right? And it has actually worked for me quite well, right? I basically take half the spread and get out. So, you know,
yeah, this one, the vertical spreads, I would say Anon memorizes
mhm.
this one really, really well.
Yeah,
I
yeah.
memorize it as much, but let me see. Let's see. We have indicators for it. Um, so for vertical spreads, there's an indicator called DPO, and
Hmm.
we could probably add this as we could probably cover this in
I
the
mean, we
quick
can
start.
we can we can cover this in future sessions with in a little more detail, right? But basically, what you're doing is when the market is kind of in an uptrend and maybe even sideways, right? You can sell puts, right? You sell put at a certain strike, and then you go a few strikes down and you buy a put there for protection to keep the ceiling on loss or to keep a floor on your losses rather, right? And when it's going in the downward direction, you actually sell call. You sell a call at a certain strikes, go a few strikes above, and buy a call there again to keep the floor on the losses.
Yeah.
Right. And sometimes in an environment like this where it's choppy, you could do both, right? Again, I don't necessarily recommend doing, both unless you're managing the trade, right? And again, right, here's the other problem, right? Depending on how far you go back on the strikes and or how far you go up, like between your sell and your buy, the risk is basically 10 to make one, right? or where we take profit, it would be 10 to make like 0.5, so to speak, right? Or 20 to 1 in a way, right? When you think about that,
Yeah,
right?
the basis is that
Mhm.
using this indicator, your DPO, if your line is above 0, you're pretty much in a positive environment. So the
Mhm.
spreads work, it works good in here. It's just kind
The
of
bull put, the put spreads would work well in a positive environment, while the call spreads work in a more negative environment,
yeah.
right?
And then here you kind of have, hey, market
Mhm.
positive, and then a couple of times you dip down, we're negative, dip down, and right
Right.
now DPO.
Now, if the ADX is lower than 20, right, it's not that concerning. It's only when it actually starts to really, fall, right, that you have to take the other side of the trade very quickly and get out of the puts, right? But luckily, that's a pretty rare situation,
So, but yeah, so we're currently in the
right? It's actually a pretty good way to make an income. If you're like, hey, you know what, I have nothing else to do. I actually made like, I was only trying one contract at a time. There are people who will do like 10 or 20 contracts, which is probably not a good idea for beginners, right? And so I tested it out, and I got like three successful trades, $100 each, for 3 weeks. Then I basically ran into the rule of pattern day trading, because each of these trades is considered a round trip trade, which is well, so unless the thing is, you could theoretically do this with no money in your account, because you're actually doing a credit spread, right? You're selling the put before you buy, and then using that credit from selling the put to buy the other put, right? Or vice versa for calls, right? So um, theoretically it should be able, you should be able to do this with no money in your account, but because it's considered a round trip trade, right? You either have to make it into a margin account, or you have to have 25,000 in your account to do this. So, you know, but it is once you do have that, it's actually a pretty good way to make some regular cash. So yeah, Henry, let's continue. What were we going to talk about next? I know we wanted to discuss the ADX, which we've done. Um,
we can take
you know,
stocks. You guys want us
yes.
to
Oh,
review?
and one more thing also, right? Not just the ADX by itself, right? But if you can actually draw a Darvis box around around the price action, right? That means, that's another indication that it's going sideways, right? So you want to see moving average crossovers, channel, whether we're trading in a channel, and also the ADX, right? When you're looking at directional, like the situation. So keep that in mind as you look at these.
Yeah, the stocks they typically kind of trade in a channel until
Yes.
they're outside the channel.
Mhm.
This is your buy zone right here. This is the break. But when you see these, you should keep a lookout because you can easily be down here as well too. You could be trading the other way.
Well,
So
yeah, that's where you would set your stop, right? So if you're trading,
so this is break
yeah,
outside the trend. This is kind of
yeah,
like the break out. You can break up or you can break down. It's possible.
yes.
You see kind of like
So
this.
just in case you're wrong, have a floor right there where you're willing to get out.
Also, yeah. So this one you have a nice
Mhm.
green arrow from ADX telling you that it's time to buy a bunch of Exxon Mobil.
Only
Maybe
if it pops down, though. Only if it pops back to the averages, right?
yeah.
You don't
Yes.
don't chase momentum,
Yeah. If you have this green arrow and then you're still close to the 50, that's not a super bad.
right? If it's broken out, right, and you start to see the green, and you start to see that separation, right, of the moving averages, right, and you're seeing a squeeze, moving up as well, right? You could probably take a chance on it, right? Again, set your stop,
Yeah.
right?
Oh,
So,
yeah. I think the Roth lead, he was asking is FinViz a free tool? Yeah.
oh, I told them already. Yeah, it
Oh,
is
you
a
told
free tool.
okay, good.
Yeah.
Yeah, we can take stocks. If you guys want to
Yeah,
review
if
them,
you guys have any stocks you want to look at, we
because
can
we
do
can be
that.
like your second set
I
of
think Fausto was talking about Hood. Let's look at that first.
Hood
Yeah.
or Hertz. Okay, he said
No,
Hood.
no. I think it's Hood.
Oh, look at we almost have a death cross.
Oh, yeah, yeah, that's true.
This
Yeah, this
this
is where,
this,
see,
this is
this
not
is where I
good.
would actually start being careful, right? Because you see how it's how the ADX is very red, and you're almost getting a death cross, right? So I would either buy puts on it or wait for it to form a base and then start turning back up again,
Hold on, let me look for the ticker
right?
for Schwab.
Schwab,
Ticker
yeah, isn't this one? Oh,
Schwab. It is. I found the dividend. Oh, SCHW.
oh,
Oh, this is no. This is Canadian. Which one is Schwab?
hmm.
Okay, what about a Webull? Webull ticker.
Oh, yeah, yeah. I guess we are looking for the brokerage. Okay, brokerages.
This is looks like it hasn't done much before.
Oh, it's pretty bad. Look at it. This is probably like a situation where you want to buy puts, in fact.
HW. Okay, like this is it. Oh,
No, no.
yeah. Let me look at stocks. Sword Corp. SCHD. Okay, SCH. Dividend. Oh, this is a dividend. Huh. Okay, we can't find Swash. But look, okay. Let's look at it. I wanted to see if there's any other platforms that are trading the same way. So we have negative ADX, so this is interesting. So maybe they're
Hmm.
expecting there's less trading activity happening.
Oh, that may be the case too. Yeah.
Skyrocketing. Let's see. Let's look at the squeeze. The squeeze could be telling us something on the weekly. Let's see the weekly. Oh
Yep.
yeah. So
Definitely.
we have red histograms. This
Yeah.
this this kind of reminds me of, you know,
Netflix
where
as well.
it's a name brand stock, it's a blue chip, and it's going down. We're looking that we want to buy it, but not when it's like this. You know,
No.
this
No,
one
no, no, no.
you can
Absolutely not.
save your
Yeah.
money and wait till you see a little bit of weakening in this. You want to get in when you see some yellow
Hmm.
and have a chance to get some on there. We got some
Oh,
yellow
yeah. Oh, let's
here.
look at Amazon. So like people have seen more of this. So Amazon, G2G, Palantir, Walmart, Iron, right? Which we showed before, but we'll show it again. Okay.
He,
Hmm. Oh, looks like it's SCHW for Schwab
oh, is it?
and MSTR. We may not be able to get to all of them, but we're going to try.
Do some. Okay. So this one I've been seeing it pop in the news lately.
Yep.
Kind of some sell-off. Looks like we're approaching, which could be a death cross.
Yep.
EDX is negative. So from
Clear
here,
downtrend here, right?
I hear
So
you could be guessing where's the bottom, but for me,
yeah,
I wouldn't touch it. I wouldn't touch it until I see some slowing down on the histogram. If I see some
yes.
yellow squeezes, then
There
I
needs
can
to be a base formation here, right? At least,
I
to
need
some degree.
to see something like this. I
Yeah.
need to see sideways.
Yes.
kind of marking the bottom. I need to see like the boat turning around because right now the boat's going like full speed, in the opposite direction that I want to see.
Yep. Yep. That's the problem here.
This one I won't touch it. And let's see Walmart. I think Walmart's doing good. Better than Amazon. Oh yeah.
Hmm.
This looks nice.
Oh, Walmart's pretty good. Yeah.
Okay, but is it gonna give me an entry? So
No, not right now. We need to wait for it to at least, pull back a little bit,
yeah, so
right?
for Walmart, I want to see kind of some coiling up.
Yeah, like I wanted to hit that red, the averages right there. Maybe not necessarily the 50, right? But at least a
I would
21,
take this. I would take this. I
right?
would,
Yeah, because this would have hit the 21, I think, at least, right?
this one set your stop
So
loss below here, 126.
yes.
Yeah, or 129 if you want to be more
Hmm.
conservative. Let's see here, what else we got? We have MSTR. Who said MSTR?
MSTR. I think it was
This one
a request here.
I wouldn't touch it until like maybe in like
Yeah, yeah.
two
Because
years.
here's the
This is a
problem with
Bitcoin.
MSTR, right? Bitcoin has fallen and is now kind you know wiggling around at that 60, 65 to 70,000 region. Uh, so my thing is, kind of wait for it to form a base, like MSTR, I mean, right? Wait for it to form a base. Take a look at the weekly chart to see, if it's, starting to turn back up, right? And then you probably want to get into that one,
Yep. For Bitcoin,
right?
this chart, this is just the only chart that I look at for Bitcoin. Pretty
Oh yeah.
much, in the past, like kind of like back testing this, anytime we get that kind of lime green, yellow to lime green, we kind of get a pullback, which is happening, which is the second half of the halving, happen each time. I don't really start getting serious about Bitcoin until I start seeing some blue dots. If I can take some blue dots in the past, it's done pretty well. And so we're nowhere near blue. We're in the probably the selling phase. So I mean, if you're Bitcoin, then you're probably long Bitcoin 10 years. But if you're looking for a short-term trade, the Bitcoin stocks, I mean, they're cheaper now, but just be prepared to hold them for, I don't know, 5 years, 4 years or so. I mean, they could pay off, but the charts don't tell us like that they're doing too good right now. They're not so hot. Oh, we got some yellow histograms. Let's look at the monthly. So monthly is super okay. So this is a red. So we still have some room to go down. Yeah, monthly's super powerful on the
Mhm.
Bitcoin charts. Like kind of it works the same. If you get in on this yellow monthly histograms in this sideways consolidation, you got the green ADX. What is this? This is 40. This takes some patience though. 40, like 200% from 40,000 to 125. So, but that is 1, 2, 3, 4, 5, 6, 7. How many months is that? That is 22 months. You got to be patient. But this monthly, if you can be patient, the stock market will pay you really well. Same thing goes with the SPY. You have yellow histograms, it'll pay you 30 months. So this one you gotta put your calls in, your longs, buy your shares, and take a vacation, go play some golf. But yeah, if you can for MSTR, yeah. I'd wait for your histograms to shape up and then start considering it. And let's see here. Yeah, you're right. Quantum, Peter Lee, quantum computing
Yeah,
can
yeah, yeah.
much. Yeah, if quantum hits,
Possible.
that means all our Chase logins, our bank logins, crypto, everything's cracked, and then nothing's secure after that. So yeah, that's kind of like a pending doom for Bitcoin. So
Hmm.
at what point do you guys try to catch a falling knife? Let's see. So
Yeah, we don't actually, right? We
they're
don't want to catch the falling knife.
yeah, they're calling target a
So,
falling knife. So
hmm,
if you see it falling, you want to see the change in trend. So this is monthly.
yes.
So yeah, you would have lost right here, but seeing this
Yeah.
change in trend. So the change in
Yeah,
trend means either that you go this way, or the change of trend means that you go this way.
right.
Just kind of have to see what's going on. So
So yeah, if it's forming a base, right, that's one possible place. But again, right, you want to actually see it break out and maybe try to retest one of the supports or the averages before you actually enter.
yeah. So this is they've been saying that this is a falling knife, which I agree.
Mhm.
I guess
Same problem here too. Yes.
like this one here, this would be your falling knife period, but it looks like when you got the yellow histograms, the
Yes.
knife is no longer falling, but this is
In
months.
this situation, we may in fact have to wait for that monthly, average to turn back up.
Yeah, this one here. So yeah, this one's blue.
Right.
You got to go from blue to red. So there's some time on this one, but I like Netflix though.
Yeah,
I
I mean, that doesn't mean we're going to buy it right now.
at some point
Right. Yeah.
more sees risk in pure downtrend. Yeah,
Yes, yes, at some point, yes.
like
That's
yeah,
why
for
we want to, yeah.
what I was saying before, like
Hmm.
if
Correct.
you cannot absolutely lose money, then I would look at this and I would just kind of consider that, hey, should I be buying hard right here? Like, no, you shouldn't. Should you be buying hard here? You should be buying hard.
More so, yes, because you need the market help to um you will need the market help, for those situations where, after the market has corrected and it starts to go back up, the stuff that has um, you know gone down, yes, when they start to come back up, you can definitely start buying those.
Yeah. So a question we got is, do we use our RSI? So yeah,
Yes,
I like
yes,
RSI, but not so much on the overbought. I can't use that as a put signal by
yes,
itself.
unless it's in RTM mode,
Yeah,
right? Unless the ADX is lower than 20, in which case you
this can go.
can actually use it as a signal. Right now, interesting thing about stuff like RSI and the slow stochastics and all, they work better on the higher time frames,
Yeah, weekly works good.
weekly and monthly, right? Especially if you start getting to the oversold extremes, they are a very good signal.
And so if I wanted to keep things simple, and I didn't want to trade that much, I would do slow stochastic on the index. And then, and so why? We have
Yeah.
something here. It's the weekly slow stochastic. It works pretty good. Um, you don't really need anything else. So weekly slow stochastic. If you see it here, this is you just mark the bottom. You see this here? You mark the bottom again. Slow stochastic here. Looks like this one needed a little time to recover, but it did. But the thing is that you'll be waiting around for a trade for a long time. This one is another bottom. If you wanted a really simple chart, this can help you. So for
And
index,
daily, right? For RSI daily, right? It works better on the individual on the indexes than on individual stocks.
yeah, yeah, that's true.
Mhm.
But yeah, that's all I got for tonight. I guess we're gonna wrap up.
Yes, we'll wrap up for tonight, and we'll be back to the normal 6 o'clock, 6:15, Arizona, like Mountain Standard Time, uh, on
Five, 5:15 on Zoom. We'll
yeah.
update that on the events tab.
Yep, we'll put it back on the events tab. I'll send you the link earlier in the week so that you have it ready for that time.
Welcome everyone. Oh, and we launched the
Yeah.
website. So
Yes.
the quick start guide, it's $47. You'll get
For those who are interested.
all
Right,
of the
Wu?
content packed into a nice folder where you can unpack it. And we're here to answer questions on that guide if you guys choose to purchase it. But if not, if you guys want to stay free, that's fine. Just keep joining the Zooms. And then we also drop our environment checks in the Facebook group.
Hold on. One Ed was asking a question about like the death cross versus on the daily versus the weekly. So here's the thing, right? Depends on whether you're doing short-term trades or long-term trades. If you're doing a long-term trade, right, then you want to see what's happening on the weekly, right? And then, but you may still want to wait for the separation between the daily 50 and 200 before you actually start buying. So you are proving that it's actually bouncing off rather than trying to call the dip and catch that falling knife.
Yeah.
Right. So keep that in mind, right? Short-term trades use the daily. If you're interested in holding something like this long term, right, wait for it to kind of turn around before, because it will maybe on the weekly, right, things have moved up so much that the 50 and the 200 are far off, right? And it may seem really bad on the daily, but it might be just a blip on the weekly, right? So if it does fall back to the weekly, just make sure that it's bouncing off rather than um, rather than continuing to fall, right? And if you do buy, set a stop, right? So, all right, a lot of good questions here today.
Thanks everyone for being with us.
Thank you, guys.
For our launch week.
Yes,
Appreciate
and sorry for being late. We'll be back to the 6:15/5:15 Pacific next Sunday. So,
all right. Good night, everyone.
Good night. We'll see you in the next. Right.